Netflix stock, NFLX is the ticker symbol, on fire. Once again, I had to push future revenue upward. We've seen some increases from what analysts expect for both 2024 and 2025. Simultaneously, that also means higher earnings. Now, Netflix stock soaring. Is NFLX stock a good buy at this price? It's a little overvalued, but not much. We'll probably see some profit taking. This thing soared hard, and the pros are going to want to take profits. This will probably bring a pullback in the stock itself. But again, I had to push revenue upward. I had to push earnings upward. So where exactly is a good value for Netflix stock, NFLX? Let's jump in. I'll show you some quantitative numbers. If you're just joining me for the first time, thanks so much for stopping by. This is a new channel for me, growing quite rapidly. Even YouTube just told me that. What I do here, I break down the economy and I answer the question, how is economic forces going to play out in the stock market? Then I look at individual stocks and I break them down, looking at them from a value investing perspective. Here we are looking at NASDAQ. NASDAQ is actually QQQ. That's actually the blue down below. XLC, Communication Services. Now, what I do is, on this one, XLC, this is the Communication Services sector. It's an ETF. XLC stock is an ETF for the Communication Services. And Netflix is actually inside Communication Services. I think of communication services, of course, as, say, AT&T, Charter, things like this, but you will find Google in here as well. So they broadly answer the question what communication services are. Netflix, to me, it's a streaming service. You could say Apple Computers in there too. As you can see, there are times when Netflix NFLX stock is below XLC stock and QQQ stock. Now it is above. And this is going back from all the way back in September when we started seeing a sell-off because of interest rates moving higher. That should be a key for you. This week we get GDP numbers. And considering what consumers are doing right now, I expect GDP numbers to be hot. I don't know where that puts it on a quantitative number, but we also tomorrow get initial claims and continuing claims. Those numbers continue to move lower, which means unemployment is moving lower, which means this economy is moving forward. We just saw retail sales sizzling again, 2 months straight, 0.6% month-over-month increases. Those are really going to start to add up. The Federal Reserve themselves are not in a situation where they can legitimately lower interest rates. The market expects them to lower interest rates. So when you're looking at this chart and you're asking the question, what's going to happen with the economy in the future, we could see a lot of this stuff evaporate tomorrow. Simply because if we get a hot number for GDP or PCE on Friday, if those numbers start to come in slightly higher than expected, that tells us that the Federal Reserve is not going to raise interest or lower interest rates, and the stock market might move lower. We could see Netflix stock, NFLX, move lower. So keep that in mind. And if you look at this chart, you can see that Netflix does go below the broader market. All right, here is a breakdown of XLC stock, the Communication Sector Services ETF. And you can see the whole list here. What I do for this, what I do, I put one share and I ask the question, earnings per share for each one of these stocks, and I update it from, I just updated this over the Christmas holiday. Over the next couple weeks, I'm going to continue to update this and move this forward, asking the question for the next 4 quarters, how much is the earnings per share and what is that divided over top of each individual stock? That gives you your yield. I then take and add that up. Now this is mine. This is different. These are the stocks that are in XLC, but I don't put the weighting. I don't believe in that weighting. I want to know what each individual stock, how it's going to perform. And as you can see at the bottom right corner, 5.442 is the yield for the XLC Communication Services if you bought one share each of all 30 of these stocks. And as you can see AT&T, T-Mobile, Fox, Alphabet, they're all in there. All right. Let's break down Netflix themselves. 8.83 was Q4's revenue. Projected revenue, 2024, as I said, I had to bump this up a little bit. 38.45 for 2024, 43.03 for 2025. Those moves higher in analyst expectations for revenue growth is what really kind of helped push the stock. Breaking down margins, 39.9%. It's a little on the low side for them, but not terrible. Operating margins starting to slide a little bit more, 16.9%. And then finally, net margins, 10.6%. This is a little bit lower than what we're used to from them. And that kind of made some individuals a little bit skeptical going into the future. Nonetheless, when you increase your revenues and despite net margins moving lower, there will be some kind of balancing there. And I expect we'll probably see next quarter's net margins increase. Price to earnings ratio, 40.5. That's rich. The broader stock market, I mean, Warren Buffett buys at 10. Tries to. 40, super rich. Earnings per share projections, 2024, had to bump this up, 16.81 for 2024. 2025, 20.95. Now, we take the yield. We ask the question, that 16.81 divided over top of the current price, 553, gives you a yield of 3.038%. Your benchmark investment rate right now, 4.14%. XLC was at 5.44%. QQQ, the broader NASDAQ stock itself, 3.343%. Out of all those, Netflix has the lowest yield. Some people are probably going to take profits. Netflix stock, NFLX, probably going to go down. It's not to say that in the future it's not going to continue to go higher, but we're probably going to see a dip because people are going to sit there and say, at that rate, it's too high. I'll take profits and I'll buy something that's undervalued. This isn't a sort of a chop against Netflix themselves. Investors just push the stock price up a little too high, that's all. Moving forward, when we take a bigger look backwards, stepping back over, as you can see, I probably went back about 18 months here. Middle of 2022, all through 2023, Netflix stock has outperformed both NASDAQ and XLC, the communication services sector. Outperformed by a pretty big margin. If Netflix stock were to move back lower, get into, even if it moved back downward to where it was just this morning, that would be an improvement to 3.55% yield if we saw that stock price again. The economy may be forced to pump the brakes a little bit. So you're looking at a stock that could perform very well in an economy that is expanding. The Federal Reserve might be forced to not allow the economy to expand. This is information we're going to be getting. We're getting a lot of information Thursday, Friday this week, and then next week, I think it's Wednesday, they have their meeting. I'll look over the weekend. But nonetheless, there's a lot of variability happening with the economy. We're still in this shifting move where we don't know what the big output is going to look like. If you're holding on to NFLX, Netflix stock itself, you might want to consider that yield and ask the question, will others be taking profits? Maybe you buy some puts, maybe you take profits yourself. As a stock trader, probably kind of want to think about both of those things. Nonetheless, I break these stocks down from a value perspective, asking the question, what's the best value? What's the best value investment? Netflix at this point, a little rich, but I like the numbers a lot. Make sure to hit that like and follow button. If you're looking for this kind of content, we'll see you in the next video.